Let's get to 1,000 subscribers. Please help support Joni and our team by subscribing and turning on notifications.
Hi everyone! We've got a lot of hot topics to talk about today. We're starting with a warning sign that many people are worried about. Is the stock market in a bubble? Then we'll dive into how a technology like Stablecoin could play a big role in the global status of the US dollar. And finally, we'll look at the latest move from Meta, which announced a freeze on AI hiring after pouring massive amounts of money into the division. All three of these stories are directly connected to our wallets, so let's get right to it.
JOYUP Invest Podcast. Invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours. Let's start with our first topic. Recent reports are making a lot of us rethink our portfolios. There are some worrying signs that our stock market might be in a bubble. Now, I'm not here to scare anyone. It's normal for the market to go up and down, but being aware of the situation helps us be more prepared. For those who aren't familiar with the term bubble, think about it like blowing a soap bubble. At first, it's beautiful and gets bigger and bigger, but at a certain point, it pops, and everything disappears in the blink of an eye. In the stock market, a bubble is when stock prices are far too high compared to their actual value, which means they could crash at any time. The first clear sign is record high stock prices, especially in the Nasdaq, which focuses on tech companies. The total market value has surged to 145% of the US money supply, the highest ratio ever recorded. That means a huge amount of money in the system is flowing and concentrating into tech stocks.
Another thing that should make us all pay attention is that the market is mostly being driven by just a handful of major stocks in the S&P 500. If these giant companies' prices drop, they could pull the entire market down with them. Right now, even experienced fund managers are getting a little nervous. They are holding cash at historically high levels, similar to the period right before the dot-com bubble burst. Plus, there's a lot of concern around leveraged ETFs, investment funds that use borrowed money to chase higher returns. These are extremely risky and could lead to heavy losses if the market becomes volatile. So instead of panicking, I want everyone to see this as a chance to reevaluate your own portfolio. Look at ways to reduce your risk, maybe increase your cash position to prepare for opportunities that might come in the future. Smart investors don't just hope to get rich, they invest with caution and are ready for any situation.
Now, let's turn our attention to the policymakers and see what they're thinking. If the stock market is this hot, you would think the Fed, the US central bank, would have some kind of plan, right? But the latest word from Fed policymakers is a wait-and-see approach, or what we might call taking it slow, especially with the risk of rising inflation. From the July 29-30 Fed meeting minutes, they noted that rising inflation could be due to higher import taxes, a factor that needs time to be fully assessed. On the other hand, the latest core CPI data shows inflation is higher than expected, while the July non-farm payrolls report was weaker, a sign of cracks in the labor market. This situation is like a big question mark. If the economy gets too hot, it risks a bubble. But if the labor market slows down, they might have to stimulate it by cutting interest rates. We'll have to wait for Fed Chairman Jerome Powell's speech at the Jackson Hole meeting this Friday to see if he sparks hope or extinguishes the dream of a rate cut.
On another side of the financial world, Christopher Waller, a governor at the Fed, has brought up something very interesting: Stablecoin, a cryptocurrency with a stable value. He said it could help preserve and expand the US dollar's global role. You might be wondering, what is stablecoin? Simply put, it's a crypto coin whose value is tied to major currencies, like the US dollar. It's a way for people to get quick, 24-hour access to the US dollar, which is super helpful, especially in countries with high inflation. Waller also mentioned the new Genius Act, which would help stablecoins reach their full potential. And as the Fed studies technologies like AI and smart contracts, he says there's nothing to fear. These technologies will only make our payment systems more efficient. It seems the Fed is becoming more open to new innovations. This is a great sign for the digital asset world.
Now let's move from money to something closer to us. If you think robots and AI are still a long way off, think again. Boston Dynamics and the Toyota Research Institute have teamed up to introduce a robot named Atlas, powered by a large behavior model, LBM. What is an LBM? It's an AI model that acts like the robot's brain, allowing Atlas to perform complex tasks without detailed human control. In the Gemo video, the robot could put items into a box and even adjust its movements if someone tried to move the box, ensuring the task was completed. This is a huge step forward that makes robots move more smoothly and naturally. In the future, we'll definitely be seeing more robots working all around us. But the AI story isn't all sunshine and rainbows. Our final news story has gotten a lot of attention on Wall Street. Meta, the parent company of Facebook, has announced a freeze on hiring in its AI division. This comes after they spent massive amounts of money hiring researchers and engineers. The Wall Street Journal reported that this freeze is happening during a major restructuring of the AI department. Analysts believe this could be because investors are getting worried about the huge investment needed for AI development. A recent MIT report said that 95% of AI businesses are still not profitable. This seemingly endless investment is making investors question whether it's a good long-term bet. This is an interesting side of the story. It shows that even tech giants have to rethink their investment strategies when faced with market pressure. To sum it up, the current market is a true test of will for both investors and the Fed. If the market gets too hot, it risks a bubble. But if the economy slows down, they'll have to cut interest rates. We'll be watching for Fed Chairman Jerome Powell's speech at the Jackson Hole meeting this Friday to see if he sparks hope or extinguishes the dream of a rate cut. Thank you to investing.com and Felix and Friends GOAT Academy for some of the information today. And now for our daily stock analysis. I'm going to break down some of the individual stock prices we've been covering today in JOYUP Forecast. Let's start with Meta Platforms Inc., META. Over the past 10 years, Meta has built a strong price base and has been in a consistent uptrend. It had a major correction in 2022, but impressively recovered and hit a new all-time high. The stock breaking through the key resistance level of around $400 is a clear sign that it's in a strong uptrend, and the current momentum is continuing. I think the stock has a lot of room to grow in the long term because it has broken out of its previous range and is now building a new, higher price base. I see a key support level at around $600, where the price has previously tested and might pull back to. The next resistance level will be around $800, and if it breaks through that, the next target will be the key psychological number of $1,000. Next up, Microsoft Corp, MSFT. Microsoft is another stock that has been in a long-term uptrend for over 10 years, moving slowly but surely. It has recently started to accelerate more visibly. The steeply upward-sloping moving average indicates very powerful upward momentum. I believe the stock has more room to go up in the long term, but we should watch out for the divergence on the MACD and RSI charts, which indicates a weakening of short-term momentum. However, as long as it stays above the uptrend line, it has a good chance of continuing its climb.
The key short-term support is around $500. If the price pulls back and holds this level, it can continue to move up. The next resistance is around $600 to $650, and if it breaks through, it could reach the $700 level.
Finally, Toyota Motor Corporation, TM. Toyota has a movement pattern that is quite different from the other two stocks. It was trading in a wide range for a long time before breaking out in recent years and establishing a strong uptrend. I think Toyota is in its strongest period in years, but we should be cautious about a short-term pullback since it has moved up quite fast. However, if it holds above its strong support line, it still has plenty of room to run. The most important support is the uptrend line from 2009, which is around $160 to $170. If the price pulls back to this level and doesn't break it, it's a good sign for accumulation. The next resistance is at $200, and if it breaks through, the next target will be around $250.
All of this is just my personal view. It's not investment advice. Please use your own judgment and do thorough research before making a decision, because all investments have risks. Before we say goodbye today, if you're a stock trader and you have questions but don't know who to ask, feel free to leave a comment and we can chat. See you next time. Bye-bye.